In this video, we're gonna have a quick look at the financials of Xylem. Xylem is an American water technology provider in public utility, residential, commercial, agriculture, and industrial settings. They basically do everything from transport to treatment to testing water. Anything water related, Xylem is a part of it. And because I sometimes see the argument made that water is going to be the most scarce resource in the future, of course Xylem will be well positioned in case that actually holds true and holds some merit. So let's have a look over at the financials of Xylem. Let's see exactly what we think. If we buy the stock today and hold it for a decade, can we expect to outperform the market? I'm going through these financials a bit faster than I usually do, so if I'm going too fast, please let me know. Their revenue has been increasing by 4% annually, which is just about outpacing inflation here. Their growth is not spectacular by any way, shape or form, but they are definitely growing a bit faster than inflation is, especially when we look over at the EBITDA growth, so the earnings before interest, taxes, depreciation, amortization. It shows that their earnings is growing faster than their revenue, which also means that their margins are increasing. Just simply looking over at the numbers here between EBITDA and revenue, and let's put a percentage on it, we can see an EBITDA margin of 16%, while in 2013 it was around 13%. So they definitely managed to increase their margins and therefore increase their earnings. Their debt level has been increasing by about 5%, about in line with EBITDA, which is definitely not a problem at all and easily acceptable, because of course a company like Xylem has to invest heavily into water treatment facilities. It has a lot of upfront cost, and therefore it makes sense that their debt level is quite high here. In 2020 we saw a debt level of 3.8 billion, even though earnings were only 600 million. But in the 2 years after that, they already started to pay down their debt here a little bit. Excess cash, they always have some additional cash on hand, also growing with 6% annually. They definitely took out a loan here in 2020, but I think they quickly realized that they don't actually need all this capital and already started using it to pay down on their debt numbers here. Market cap is the entire value as seen on the open market itself, so it's the market price multiplied by the amount of shares outstanding. 6.4 billion in 2013, just over 20 billion in 2022, an average increase of about 12.2%, which is just about slightly outpacing the overall market trends here. Enterprise value is the entire value of the business, the market cap, and then we add the debt and we subtract the cash. It's about growing in line with the market cap itself, not much to say there. EV/EBITDA ratio, so this is the multiple with which Xylem has been trading for the past 10 years, and we can definitely see for the past 3 years that they've been trading an absolute multiple of around 30 to 25 times, which is definitely well above their 10-year average here. From 2013 all the way through 2019, we can see a multiple around the 14 and 19 times. So I think the spike up to 30 times definitely moves away from the overall average number that we have been seeing, and I can actually expect this number to come down here in the future, which we have already seen a little bit here in 2022. Although I still think 26 times earnings is quite a high multiple. Net debt to EBITDA, on average they're always circling around the 3 times, where in 2016 they had a very high multiple here, but they've been consistently buying back debt here for the past few years, so I definitely think they check the box here. Moving over to their cash flow, we can see them growing their cash flow from operations about in line with their EBITDA numbers. 300 million in 2013, 600 million in 2022. They have a relatively high capital expenditure because of course they have a very materially intensive industry. They have water treatment plants which simply require a lot of maintenance and therefore require a lot of capital expenditure. The moment that we take the cash flow and we subtract the capital expenditure, we get the free cash flow, which is basically all the money available to you as an equity owner at the end of the fiscal year. This money can be used for either dividends, share buybacks, additional acquisitions or expansions, or possibly even mergers, or they can buy back some debt. We have seen them for the past few years buy their debt down a little bit, and they're also issuing a stable dividend. Looking at the shares outstanding tab, we can see that they've remained relatively stable here for the past 10 years. 186 million in 2013, 181 million in 2022. Not much movement in their overall outstanding shares here. Their free cash flow per share is growing in line with free cash flow itself because the amount of shares outstanding remained the same, so nothing much to say there. The price per share as seen on the open market itself has been increasing by 13% annually. $34 in 2013, $111 in 2022. And this number does not include dividends. You also get additional dividends on top of this, which is of course subtracted from the share price itself. Free cash flow yield on average has been around 3.6%, where I think for the last 2 years we've seen a relatively low number, mostly because their free cash flow is a bit on the low side compared to their previous years. So let's try to forecast Xylem into the future here. Looking at their average growth here for the past 10 years, we can see an EBITDA growth of 5% annually. I'm going to give them this 5% for the additional 5 years, and I'm going to reduce it down to 4% for the last 5 years. I'm also going to attach a multiple of 20 times, which is about the average for that 10-year period. Even though for the last 3 years we've seen a lot higher than this, I do expect this number to come down a little bit back to the 20 times range. This gives me an enterprise value 10 years from now of about $26 billion, from which we then subtract the debt, we add the cash, gives us a market cap of $24 billion. Divide this by the amount of shares outstanding, and I'm assuming here that the amount of shares outstanding remain the same. This gives me a stock price 10 years from now of $136.63. For the free cash flow method, I'm going to do a very similar thing. I'm going to grow it by 5% for the first 5 years and then 4% for the last 5 years. I'm going to attach a 4% yield to it as well, which is slightly more conservative than their overall average for the past 10 years, but I always like to be a bit more conservative with my estimates. Based on the free cash flow model, I expect a stock price 10 years from now of $83.22. Looking at the price on the open market right now, I can buy as many shares as I want of Xylem of $113.59. Taking both my projections, so the enterprise value as well as the free cash flow method, I get an average share price 10 years from now of $109.93. Simply looking at the returns on the stock market itself, I expect a compounding annual growth rate in the share price of minus 0.3%, meaning I expect you to lose money every single year if you buy this stock right now. The moment that we include the free cash flow, so all the dividends that you can expect from Xylem, as well as potential share buybacks or additional acquisitions or expansions, then I expect an IRR, an internal rate of return, of 2.4%. On average, the market always returns about 10%, so I think right now with the current price, Xylem is definitely a bit overvalued for the amount of money that they produce. But let's see what happens if the price goes up or comes down a little bit. So the moment that the price goes down here to around the $80 range, I still expect an IRR of about 6.7%, which is still underperforming the market. The moment that the share price goes up to around the $150 range, I expect you to lose money even on an IRR basis simply for buying the stock at that price range with the current earnings and current projections. So as of right now, I don't think Xylem is in any way, shape or form a good investment, unless of course you believe in the scarcity of water somewhere in the next 10 years. Thank you very much for watching. Don't forget to like, subscribe and all that good stuff, and I'll see you in the next one. Cheerio!